You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, that great place for all sorts of free options information. If you like what we talk about on this show, whether it's the news, whether it's the unusual activity, we got a lot of that on the site, listeners, some trading analysis, some trading tips, all kinds of fun stuff, as well as access to all of our fine programs, then by all means, head on over there, theoptionsinsider.com. We're not just a radio network, no sir, we are quite a few things, including one of the leading online destinations for free options content. And of course, the aforementioned network growing, expanding all the time. Some new shows coming down the pike pretty soon, listeners. Stay tuned for those. And where can you find all those great programs? Well, of course, I mentioned the website. You can also head over to iTunes or Stitcher or Aha Mobile or wherever you like to find your finer podcast programs. And of course, if you're using a mobile device, check out our mobile app. I know many of you have, many of you like it. It's available for iOS, Android, and the Fire OS. You can instantly stream all of the episodes of the Option Block, all 300 plus of them, as well as all of our other fine programs. And you can also download them for offline listening. And then you have a question, you have a comment, you say, you know, that Tusaw guy, he's really kind of crazy. I need to write into that show and set him straight. Well, you can do that right built into the app. Send us a Facebook question, a tweet, an email, even leave us a voicemail. It's all baked right in there into the app. It's really cool stuff. Check it out. The Options Insider Radio Network mobile app, available for pretty much any platform of choice for you. All right, and joining us on the old all-star panel today, we got the usual roster, the usual cast of characters, starting off with the man of many hats, none other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the show, sir.
Mark, good to be here. There's nothing usual about this crew.
Yeah, that's true.
Tell you what was interesting today, and again, this will get me the door cat, as usual, but huge volatility in the bond market today. The 10-year, the U.S. 10-year and the German 10-year moved 40 and 50 vols today. So, and the U.S. 10-year looks like it isn't going to hold 240. So there was clearly a flight to quality today, out of equities, into bonds, little pop in gold, and as Andrew pointed out, lots of geopolitical stuff going on. And today it was clearly weighing on the market.
Well, and lots of geopolitical stuff is cooking. We turn to our friend who likes some of the macro-related products. Of course, I'm talking about Uncle Mike Tusaw from RCM Wealth Advisors and RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always happy to be here on a beautiful Thursday afternoon here in scenic St. Charles.
All right, and last but certainly not least, joining us from the hinterlands of that great state known as Maine, taking a break from his rock lobstering and lobster fishing and all that fun stuff, none other than the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, as well as our own unusual activity profiling over there on the Options Insider. You're a busy man, sir, Mr. Rock Lobster.
You know what? I'm almost feeling like Alex wearing all these hats. I need to start getting some more hats. At least one more T-shirt from the Option Insider Radio Network for all my many jobs over there.
Well, didn't you know that that's how we pay our people, in T-shirts?
In swag. Yes, that's
all
what
sorts of swag. Hey, there's aprons available now. We can get you a nice apron for all of your grilling over there.
I hear the coffee holders, the little coffee, the thermos coffee mugs, are second to none.
They are quite good. I just got a pair of Bluetooth Options Insider Bluetooth headphones, so stay tuned for all that good stuff.
I have never heard more blatant pandering for swag before.
That's how he gets all his clothes, Alex. Otherwise, he has to wear all that LL Bean hand-me-downs they have up there in Maine.
Exactly. All I look like is an LL Bean outlet store.
I still have cases of SIBO swag from when I worked there. And when I came here at OX, I started to bring some of it in, and for about 2 weeks, I was the most popular employee here at Options Express.
I'm going to say there's probably still a latent market for that. You can open up a little eBay store of your own there, Mr. Viceroy, and have a nice little side business going on.
Yeah, the merger shirts, if you remember the Pacific SIBO merger.
I do.
Those were on eBay for a while at between $100 and $200, and I had a case of them, but I had a case of them where the employees had been told, if one of these shirts ever appears anywhere and we track it back to you, that was your last day. So
wow. They were serious business about those shirts.
Oh yeah. Yeah, they can't fire me, but if they go back up on eBay for $100, I will be the supply.
So that's when we know that the Viceroy has finally gone out on his own into the T-shirt empire he's always wanted to operate there.
One of my favorite, shirts from the PCX was when they were going to build the tower in I think it was 1997.
Right, just before the merger. Right.
Exactly, right before which would have been the most ill-fated expansion close to the top of the dot-com boom ever in history. Thankfully, the PCX. Actually, I shouldn't say that, but the chairman at the time had died and was replaced by a guy that was a little bit better of a manager.
Since we're talking swag, before we dive into the trading block, listeners, I reached for my coffee yesterday morning in a travel mug in my shelf, and I looked at it, and it was an old Board of Trade from when they went public. It had BOT on it. So those are not around anymore, because I think Board of Trade was public for all of about a year before CME gobbled them up. So that's certainly a collector's item. I'll have to add that to your eBay offerings, Alex, when you finally go out on your own. I think we have a nice little business here. I'm looking forward to it.
Yeah, I just have one shirt left. That's it. I got a shirt, and I've got my old acronym tags and some stuff like that. But I didn't collect. I just didn't think it would all just go away so fast, but it did.
I got a lot of Bush League Arena football shirts. If anyone wants any of that, I got some Chicago Rush apparel. I have some Wichita Stealth apparel.
That's good stuff. I think we have the makings of some serious eBay money.
Yeah, what used to be the currency on Wall Street would be when a firm would announce it was closing. You would go to their gift shop. I remember when Kidder Peabody closed. You would go to their gift shop and buy everything. Every piece of swag, every bag, T-shirt they had, and the stuff all had a spike in volatility for the first month after they closed, and then nothing. And then you could wash your car with it.
All right. Since we're talking about making money all these fun ways, we might as well keep on rolling right on into our first segment. Yes, it's time to close down the old swag block and open up the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, and we'll kick things off here in the old trading block. Like Alex and Andrew and Mike said, it was a wee bit of a down day on the old street. Certainly nothing as aggressive as we saw last week. And by the way, listeners, if you're playing the home game, we are recording this on Thursday, August 7th. You'll be hearing it on Friday, August 8th, of course, or whenever you decide to tune into our fine programming. If you time shift, we fully encourage that. And listeners, of course, a lot going on today. S&P selling off nearly 11 handles to close the day, down to 1909 on the day. The Dow down about 75 handles. The Q down about the lowest of the bunch, the laggard on the down day today, only down about 1/3 of a percentage point or so. And the VIX cash ticking up ever so slightly to 16.65 on the day. But before we dive into all that macro stuff, Andrew, I know where all your attention is fixated right now, because as we speak, listeners, we have an After the Bell report from none other than Andrew's favorite holding, Zynga. They closed today $2.92, so well off its recent highs. Listeners, we got up into the 4, I believe even into the 5 handle for a brief period there. And this is the name that's of late been doing about 25,000, 24,000 contracts a day, so fairly robust volume, a cheap name there, so the stock is also an option in many ways. Doing well over 100,000 today, so a pretty robust day today. And just looking a quick peek here at that weekly 3 straddle, went out at about 40 cents or so, 39.40 at about 44, 45 or so. So expecting a bit of a drop, and looks like in the after hours they're pretty much getting exactly what they expected, closing at $2.92, trading right now down about 40 cents exactly in the after hours at 2.52. So how do you like that? A well-priced straddle out there in Zynga. Mr. Andrew, what's been your play up in Zynga of late? Are you still rocking all those bullish risk reversals, or have you been diving elsewhere and looking elsewhere for some premium plays out here?
No, I've been saying no to Zynga for a while, probably since, I don't know, what was the last time, January, February, something like that. It had worked out. I finally was up money after getting kind of hosed earlier. And I've taken my chips and basically just gone away, mostly because it hasn't done anything. And the turnaround efforts, well, they're still turnaround efforts. Although I'm just reading, they got Tiger Woods golf and they have some sort of NFL game now. So who knows? Maybe they'll start making games again that people want to buy and stick on their phone and play all day and not do any work. So could happen.
So what you're saying is that they're paying hefty licensing fees even though their stock is in the toilet. Interesting.
Well, they're paying, at least they're using cash for licensing fees and not spending money on, I don't know. What do they buy? Does anybody remember that company they bought when they first?
Yeah, they bought that. They made Draw Something, which I believe was the hot app for about 2 weeks last year, and they bought the makers of that, which of course is a smart acquisition. That was, of course, before, I believe, the change of management at the CEO level, and the new guy came in from Xbox. Of course, last time we really talked about this stock aggressively here on the show, Andrew, it was flirting. I'm looking at the chart right now. It was flirting with the 6 handle. It got up to 590. This thing was just off to the races. There was no end of the love for Zynga. And pretty much after the last time we talked about it, which was back in late February, early March, it's just been selling off and selling off and selling off steadily ever since here. And like I said, closing today south of the 3 handle and trading well south of that right now. So no lingering positions here in Zynga. I just wanted to check. I know a lot of our listeners may be curious what the Rock Lobster is up to out in Zynga land.
No, just it's all after they kind of disappointed. Well, they had that, I guess they had the gambling thing that kind of made it an interesting play on the upside, and then they just let it all go by the wayside. So I think that was a lot of the early spec or the good spec on it, and no mas. Zynga is just, I think, going to be a stinkwad company for a while, but we'll see how the sales go. And, I started looking at the user numbers on some of the games, and you start poking around TechCrunch and stuff like that to see how people like the new stuff. It could be something to dip back into at some point, but it's not going anywhere fast right now.
It's like the AUG 3.5 went up size today, 20,000 plus times out there, or at least those 2 strikes were lighting it up today, whether they were trading spreads or not. Probably a little bit of it there. Either way, interesting stuff out there. Maybe Zynga will become like your Cisco to Uncle Mike, Andrew, where you just can never talk about it again. The pain is just too great.
I guess. I don't mind talking about it now because I did crazy things in there like buy premium and it worked. Because it was it was so small relative to the price of the stock.
Yeah,
it can be done.
You can rationalize it away easier when it's a little $3 cheapie. Speaking of Cisco, reporting next week, listeners, so stay tuned for that update from Uncle Mike. But aside from Zynga, what else was going on over there in your chat room today? What caught your eye in today's activity?
we had a hard time coming up with things to do today. Mostly, I think it's one of those things where it feels like the vol, what I call kind of like a vol fatigue market where implied volatility is, pretty high at the money. I think it's good for premium sellers right now. You want to sell out of the money, put spreads and stuff like that in the index. I think it's probably a good time. It's like Mike was saying earlier, it's picking your spot is not super easy. And, with the geopolitical concern, there's always that sort of rubber band stretching and stretching and stretching. You just don't know how far, the market, as long as this Russian and Iraq thing has been going on, the general trend has been south. So, where do you pick your spot to sell out of the money options? You got to go pretty good distance out of the money. I would say like 10% if you really to build enough margin for error and something like that right now. So you don't get great premium, but with the VIX on 16 and a half or a little bit above, it's starting to get interesting. The 1800 number is looking very interesting to sell, I think, like in the SPX. What we did see today, though, flirting back and forth with, another close where the VIX futures are trading below the cash. So normally that means that we're looking for implied volatility to come in a little bit. The term structure is almost dead flat for 5 months. So I think there's a market is usually, to me, that's pricing to move. So we should see kind of sort of a blow off on the downside or kind of a relief rally on the upside. Right now, there's some headlines about there possibly could send some airstrikes in Iraq. Generally, when the U.S. goes in, the market goes up, especially if they start taking out some, slowing the advance of some of these terrorist guys. And the stocks generally like that. Historically, they've always liked it for 200 years, basically. So at least in the 20th century when U.S. involvement, usually meant a difference. So I think that's where we are. We'll see what happens tomorrow. But if we do see some real airstrikes, they don't telegraph 3 weeks in advance, we could start to see a little bit of a rally, or at least this getting somewhat close to a near-term bottom.
And Uncle Mike, you had a relatively easy day today because I'm looking at the screens here. Apple down about 0.5%, gold up about 0.5%. So you're pretty much flat. You can just wipe your hands and go home, right? Because there's not much going on, right?
I kind of felt like a day trader today in that as the market opened this morning, I had some short puts on SPY, and we opened higher. So I ended up taking profits on the puts as we rallied in the morning. And right away, and by rally, I mean it was a pre-market rally, because pretty much about 10 minutes into the day, we started going down. I was literally probably about 2 pennies off of my profit target. And so I just decided not to stay in this for the rest of the day because of the fact that for 2 pennies, I was more than happy to just get out of that and then possibly look for another opportunity later in the day. It was worth the 2 cents. Obviously, I'm glad that I did. So I basically had my finger on the button all day, didn't leave the screen for 1 millisecond. Okay, maybe I did leave a little bit, but not too much. And right at the end of the day, I ended up selling another put spread. So I think that I think this is a buying opportunity at this point in terms of just the market as a whole. But if it is a seller's market, meaning if we do come down a little bit more, I like the fact that the VIX is high enough to where there's a good escape route through selling puts. So I'm a put seller.
You dirty, degenerate put seller, you. I knew you had it in you. It just takes some time to come out of you, and eventually the degenerate premium seller comes out in us all.
Well, maybe I should start buying some. Now you're making me think.
Here's Andrew talking up all of his love of premium buying, and now here you are. You're the degenerate premium seller. You two have switched sides of the coin.
Only sometimes.
All right, Alex, save us from all of this madness. What was cooking? What was lighting up the old tape over there at OX? I know you guys were pretty active on the futures option side of the fence today. In particular, some of the wheat and the grains. You know, all this talk of Russia clamping down on exports from that part of the region. That, of course, being Europe's breadbasket. A lot of impact on the wheats and the grain products. So, sounds like that's been lighting up the phones over there at OX for the past few sessions.
Yeah, I think Andrew characterized the day well when he said volatility kind of looks fatigued. But about 2:15, I went down to talk to John Grigas, who runs the trading desk, and a couple of things were keeping him busy today. But he actually wanted to route a couple of calls up to me from some of the folks who wanted to talk about what the Russian embargo would mean and how it might impact. And I think a lot of people were having that discussion today. But Netflix and Priceline picked up today after the chairman of Netflix comments yesterday. We saw some activity in social media today, too, LinkedIn and Facebook. But I want to tell one story here, as long as we were talking about, on Monday's show, we were talking about Groupon, because whenever I go see Grigas, he always has the Groupon discussion with me. But as I was driving home yesterday, I drive in. So I come in after the rush hour in the morning, and I leave after the rush hour in the afternoon. And I'm driving home last night around 6 o'clock at night, and my, the Bluetooth goes off in the car, and it's a number I kind of recognize, and so it's a familiar number. I answer it. It's one of my old hedge fund buddies in New York City, and he's at one of these funds that I don't know if they have 30 billion or 40 billion, but he listens to the show every once in a while, and he will call to just dig into me. It's like, last time he called me, he goes, "Do you really want to talk open interest?" It just, opens up a Pandora's box. But he said he is shorting Zynga and Groupon. He thinks they're doomed. And I said, "So how much are you shorting?" And he said something really interesting to me. And the point I want to make here is not so much that he's shorting Zynga or Groupon, but it's the way some of these macro funds think about things. And you saw this play out with Icon and Ackman here in Herbalife. But I said to him, "What are you shorting?" And he said, "Everything I can. Everything I can. I'm going to be position limit bearish and short all the stock I can." And of course, you hear those kind of conversations and you say to yourself, whoa, these are not high price stocks, so it's kind of easy to do. Yeah, and you worry that when they get cheap enough, somebody might come in and take them. But it was curious. His two best short ideas were Zynga and Groupon, and he doesn't think they're likely turnarounds. So I thought I would share that because that's kind of interesting to see him play in that space.
Well, so far he's pretty happy today. Both of those stocks selling off pretty good. We already hit on Zynga, and Groupon also off about 3.5% today. So taking it on the chin on both of those today. So your friend there, a happy camper at least today.
Yeah, and I suspect he's not in this for a day or two. I suspect he's in this in kind of a macro view where he thinks they're not going to continue as ongoing businesses. But it was an interesting call. It was funny, too, because I talk a lot about the fact I live in Deerfield, and I'm pulling into my driveway. I'm still on the phone with him. I've been on the phone with him for 40 minutes. And, of course, my wife calls and says, "Where are you?" And I said, "I'm in the driveway. I've been on the phone." But it had been so long since I spent any time talking to the macros that I forget how, these guys are when they position themselves. And he's just thrown it down on both of those names. And I thought it was interesting.
Good stuff, as always, Mr. Viceroy. And now we're going to keep on rolling with the show right on into our next segment. Yes, it's time, listeners, for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, you know what that sound means. It's time, once again, for the funky portion of the show. It's time for the Odd Block, the portion of the show where we dive into the weird part of the old options market. Going to kick things off today with I don't believe this is one we've talked about before, so this sounds like a newcomer to me. Maybe Andrew will correct me, or some of the listeners may. They remember sometimes better than I do. We do so many over here. This is Flotek Industries Inc., ticker symbol FTK. Closing today, $27.40. This is not exactly the best day for Flotek, down about 2% or 53 cents on the day. It's the name that does usually, on a good day, about 2,000 contracts a day, doing 100x that. Yes, well over 200,000 contracts going up today in good old FTK. Just some size paper out here. And to find what was lurking out here, you have to go a couple places. First off, to January, where we saw a size risk reversal / combo, whatever you want to call it. It was the Jan 2015 32 calls going up 31,000 times versus the Jan 23 28 put spread, and that all went up for a net of 80 cents. There's pretty much no open interest to speak of on any of these, about 50 contracts or so. So this is all open in paper. Looks like he used the call sale. It's reverse what we usually see. Usually we see people selling puts to buy calls. Vice versa, this guy's selling calls to spec on some downside here and buy some puts. Did it on a bit of a ratio, actually. So he bought 30,000 of the Jan 28 puts, sold 30,000, of the Jan 32 calls, and then he sold 45,000, extra 15,000 of the Jan 23 puts. So looking to finance some trades here. Also saw a big trade out here in the SEP 20 puts, 62,000 of those going up. Looks like that's a bit of a roll because there's 64,000 open on that strike. So he's rolling from SEP out here to Jan, adding a put spread leg and also adding an upside call short leg to this position. So this is all kinds of funky. Mr. Rock Lobster, walk us through your take here on this mega funky roll risk reversal here in Flotek Industries.
On all this Flotekery that we're seeing?
Yes, that's a technical term, I believe.
That is a technical term. I'm looking at the way the stock trades. Spent most of this year above 28 and not a lot of time above 32. So I think this is a protected trade where they bought the put spreads before, locking in gains in September. I think they closed the SEP and then they rolled and went to January for this year. I think they're just happy with, they're just happy with a small gain, because if they're buying these put spreads and now they're rolling out to Jan, they haven't done too well on them. So unless they really were long some stock against the position, because they had a nice little run earlier, that could be the only reason why I could see them, or they're just trying to build a short position that has, after, 6 or 8 months, has not worked out very well. And it's still going up for a bit of a debit, even after they sell the extra 28 puts. So it's like, it just feels like kind of there's a long stock position. Maybe they've held it for a very long time. It's a pretty sizable position at 31,000 contracts. So I think they're just doing some protection, and they don't see huge upside in the stock. And that's what the position is. I think it's just a real big, funky collar.
But certainly we can hope that, because if this guy had some stock on, this position makes a lot more sense. If he's just been rolling these puts, he's hurting. But if he had that long stock on, this has been pretty much a banner year here for FTK. Since the start of the year, it's been pretty much nothing but up. It was trading $20 at the beginning of the year, got up as high as 32 at one point, even a little bit north of there, and has been selling off a little bit lately. But if this guy had these puts on, or at least the stock on from way earlier, this position probably looking all right. If you're just looking at it from an options perspective, not so much. But when you add in the stock, then it becomes a bit of a different beast entirely. All right, moving on to our next victim here in the old odd block. This is, I don't know, Gerdau. Is that how you say that? Gerdau SA. This is an ADR listener's ticker symbol GGB. So all kinds of alphabet soup flying around. And this one closing today, $5.81, essentially unched on the day. This is the name that does about 1,000 contracts a day, doing 5x that, about 5,000 or so today. And what we saw, surprise, surprise, was essentially a mega block of 5,000 puts going up out here in GGB. It was a little bit longer term, actually, than what we just saw in our previous victim there. This is the March 2015. It was the 5 puts, to be precise, going up in one mega block of 5,000 for a quarter, 25 cents open interest, just 22 contracts, so all open in paper. Looks like on the open, it might have actually been one of our favorite trades. You boys over there at RCM, Uncle Mike, call it the triple income strategy. A lot of people refer to it as the wheel strategy as well, the wheel of fun, or whatever you want to call it. This looks like this could have been a part of a wheel trade. We talked about a put seller out here back a few weeks ago on July 17th. There's been steady put sellers in this name ever since. Looks like this is a 5,000 lot sale as well out here on these March 5 puts. Is that your take as well, Mr. Rock Lobster? Are we looking at the continuance of a wheel of fun out here in GGB?
I think this is a Ferris wheel of fun, almost. If you look at the open interest, we've profiled this probably 4 times this year. They've sold puts, and I think the real winner, though, is they just got to pick a low enough level, I think, which is the 5 handle. They sold, I think, some 5s and a halves and some 6s. If you go back into the history of the odd block. But yes, I think they're now just continuing. We're just going to sell some more. I think this is a Brazilian steel company, and they're just kind of picking the bottom, and it looks like the 5 level is the happy bottom to pick. That really sounded strange, but nonetheless, that is what I'm thinking there.
Man, that's the title for our show today, The Happy Bottom.
The happy bottom.
so many other meanings.
You know, if Sebastian was here, he really would have turned that into art.
Yes, he would have run with that
softball up, and maybe Alex or Mike will knock it out of the park at a later date.
The man works blue. What can I say? All right. We have a few more here, but it's Thursday. I want to make sure we have time for the listeners to join us here. So we're going to keep on rolling right on into our next segment. Yes, listeners, it's time to don your fancy hats because it's time for the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, Mr. Viceroy, a lot cooking over there at OX today. We touched on the Russian impact on the grain options there. We talked about Netflix making some headlines recently that they surpassed HBO in terms of subscriber revenue. So, and Netflix, a bigger entity now from subscriber perspective than HBO, which is, of course, the old school standard bearer of old school content. So a lot of stuff cooking, a lot of stuff happening over there in the land of OX. What else caught your eye over there, Mr. Viceroy, in today's activity?
Well, one perennial name that runs hot and cold here ran hot yesterday and then petered out today. That's LULU, a perennial favorite up here, and a lot of accounts still sitting with the stock, and its stock is really well off its kind of all-time highs. But we talked about. I'm sort of in agreement with Andrew that today looked like a fatigued volatility day, and I want to leave time for the viewer questions. So I'm going to I'm just going to touch on 2 other points in the Xpress Block. And first and foremost, for those of you who trade on the Schwab side, the 3 and 4 leg trade ticket, you'll start to see webinars on it in the month of August, and it should be released in the month of September. So I know those of you who trade on the Schwab side, or those of you who are what we call OX and Schwab duals, we'll be excited to see that you'll have that capability on both platforms coming in September. And my perennial favorite, IdeaHub, we're adding 10 names into premium harvesting. I take that back. I think we're adding 8 names into premium harvesting. I just like round numbers. But then again, I still think options still trade in fractions. But 8 names, those are coming in the next technology release, which also should be within the beginning of the fourth quarter of the year. So after September, those of you that are fans of IdeaHub, that's going to beef the names. And again, they're, for those of you familiar with, we run it off the SIBO volatility benchmarks. And effectively what we're doing is we're bringing in the underlyings that the SIBO trades or list vol benchmarks on that we didn't bring in the first iteration. And we're anxiously waiting to see if this Whaley Cash VIX files and gets any momentum, because we'd love to add that to the IdeaHub, so you'd actually have the ability then to trade credit spreads on the cash product. And that's what's going on here at OX and Schwab.
I think a lot of people are waiting with bated breath to see what emerges from that Whaley product. They're making obviously a lot of very grandiose pronouncements and promises with that product. It'll be interesting to see if it can live up to all the hype at this point. It's kind of being pitched as the panacea to all the ills of VIX. And if anyone could do it, you think Whaley could. He has some history with that product. But we'll be waiting and seeing to see how that one turns out. Meanwhile, listeners, it's time for you guys to join us here on the old All-Star panel. Yes, it's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, like the man said, it's time for you guys to join us here on the old show. Make your questions and comments and insights known to us here and your fellow listeners. No shortage of ways for you guys to do that. Surf on over to the website, post a comment there. Use our website feedback form. A lot of you guys like to use that. Send us a tweet, a Facebook question, even send us an old-fashioned email. questions@theoptionsinsider.com. Just be sure to put question for the option block in there somewhere so we know which show you're talking about. All right, first up, Mr. Uncle Mike, put on your listening ears, sir, because you got a fan here. You got someone who wants to perhaps avail himself of your services. This one comes in from Reuben Brooks. He writes, a few months back on one of your shows, I think the option block, Uncle Mike from RCM was talking about some kind of special offer for individuals in the wealth accumulation phase. You jumped in and pointed out that us listeners would be stupid not to take advantage of this. So I am trying not to be stupid. I wasn't able to follow up right away on that, and in fact, I have fallen behind on my podcasts. For shame, sir. He goes on to write, but I would like to find out more. Can you put me in touch with Mike? If you have any other resources for me, I would love to hear it. I'm 25, an engineer. I'm intrigued by active trading, but a bit dubious of technical analysis and trying to find more edge and use options to exploit that either long-term or short-term. Have been trading options in one lots to learn. Your podcasts have been a huge, all in caps there, huge help in blasting through the steep initial learning curve. Well, great stuff, but before we dive into that, Uncle Mike, Mr. Reuben here, wants to reach out to you, wants to avail himself of your services, so why don't you go ahead and refresh Mr. Reuben and anyone else out there who may be interested in how they could best get in touch with you.
Yeah, definitely. Reuben, thanks for the question. Best way to get in touch with me, the email, my company-sponsored direct personal email is mtosaw@rcmam.com. Feel free to send me an email, or my direct phone line is 312-212-3531. Feel free to call anytime, and we'll talk some options.
Yeah, and I like everything else you're saying here, Reuben. You sound like you're doing it the smart way. You're learning in small increments using one lots. That's great because you're putting a little bit of money at stake, but not a lot. You can also accomplish that with paper trading, but we find when you have even a one lot, you have a little bit of skin in the game. You pay more attention. You pay more attention to the results, and you think you learn a little bit more. At the end of the day, you're also listening to our shows, not to brag, but I think our shows are a good way, and hell, they're all free. So you can certainly download all of them to your heart's content. Listen over and over again till you get the concepts. And if you have questions, you said feel free to write in. I also like what you say here about being dubious of technical analysis. I'm a bit guilty of that myself. I've been a bit burned over the years and watching so many people try every different indicator under the sun, from Fibonacci to Bollinger Bands to what have you, and all of them having mixed results at best. But c'est la vie. If you're dubious of it, you can join the club as well. And not to toot our partners on the show here too much, but we also are somewhat fans of what the guys over there at Option Pit do. So if you want to invest a little more in your options education, Andrew and Mark and the guys over there can certainly get you going. And you guys have a lot of deals over there these days, Andrew. It's not that expensive to kind of test the waters over there, correct?
No, it's not. It's, for basically, I think $100 a month for kind of like a basic thing. You just get to listen to recordings of going through how trades work from beginning to end, seeing performance, how volatility works, position management, the whole thing. So there's lots of ways to go. We also have our boot camp, which we'll talk about at the end, but there are lots of inexpensive ways to get lots of learning fast. And then you could actually go understand what TUSA is going to do for you.
Yeah, so you can just put it all in the capable hands of Uncle Mike TUSA and just close your eyes and wait for the results to come in. There you
and
go.
Hope for the best,
Yes.
which apparently works for people over there at RCM right now.
Doing stuff actually works. Go figure. All right, next up we have a question from Christian Carapolo. Fine Italian name here. He's been very patient. He sent this in a while ago, so I want to make sure he gets featured on the show as well. He writes, if you buy an option on a company that ends up merging or being bought out with another, what happens to the option that you own? Well, this is a great question, Christian. Try saying that 5 times fast. That depends on a lot of factors, what the exact corporate action is, what the impact of how many shares you get for one versus the other. So there's a lot of nuance that go into this decision and this analysis versus, giving just a blanket statement. But that said, Alex, I know you're champing at the bit to get in on this one, and you've seen probably more corporate actions in your time frame than all the rest of us combined. So from maybe a general 10,000 foot perspective, what advice do you have for our friend here, Mr. Carapolo?
So 2 things will happen. First and foremost, Option Clearing Corporation will make the decision what they'll want to do. But as a general rule, OCC will not do anything to create a taxable event. So what I mean by that is you're long the 40 calls. There's a deal to take them out at $80 all stock, and you own calls that expire well past the deal. And the calls are going to go to 39 and change on the bid side. But what OCC will not do is say, look, we're going to self-destruct that option chain and give you a taxable event. Those calls will continue to list. Now, notice I didn't say they'll continue to trade, because often what happens in cases like this is, yes, the calls will be listed, but nobody's going to trade them. And the bid, if you own the 40 call and it's an $80 bid, you would think the bid on the 40 call would be in the $40 area, but it won't be, because if a market maker's got to take that position back in, they're going to have to do a conversion. They're going to have to, do the stock essentially. So they will continue to be there, even if they're leaps, even if they're got a 2-year expiration past the day that the stock disappears. OCC will not stick a taxable event to you. They will become illiquid. I'd encourage you to trade out of them. But if for some reason you want to carry them, you want to carry them into January of 2016 because you don't want to pay taxes on it till 2017 and you own those calls, they will be there. But what OCC may do is restrict the ability to exercise, because there will be no stock. The stock will all be gone, and that's why the ARB will be so expensive. That's why even though they're quote-unquote intrinsically worth 40, they won't be trading at 40, and I would encourage you not to wait. But if you want to wait for tax reasons or some other reason, Options Clearing Corporation will not force you out of them.
That's why we love having you on the show, Alex. No one is more deeply versed in the minutiae of OCC than you, sir.
Ouch.
Yes, that's damning with faint praise, but nonetheless, it is very true. Great question, Christian. We get variations on this theme all the time. X corporate action is happening and Y underlying what happens to me, special dividend, takeover, whatever the case may be. Alex is right. OCC is the place to go to find out all that stuff. That's the Options Clearing Corporation. They do have a website, or you search for your ticker in OCC. They should be able to see. Someone will explain it out there, or go to your broker. That's a good place too. They should be up on these things and say, hey, what's going on with this corporate action here? What's going on with my listed products? They should be able to explain it to you. Hey, if you have OX, call up Alex. He'll walk you through it himself. Just ask for the Viceroy when you call up OX there. But great question there, Mr. Caropolo. All right, next up, we have an old friend of the show here, Kaiser Dog 76, he of the epic show questions. He writes, thanks for the option block update today. He's talking about last week when I was on vacation. He goes on to write, missed Longo, but the Seabass Tion did a decent job. Don't want to put words in his mouth there. The world's shortest odd block, though. Sounds like Sebastian. But after looking on the webpage, I found the juicy, unusual activity I crave. Laugh out loud. That VNDA trade is intriguing. There are some heavy out-of-the-money open interest in VNDA all over the strikes and going well out into the future. I do love me some biotech. So today I have two stories for you. Let me just see here. One of failure and one of success. Let's start with the failure. Back when PBYI was around 49 to 50-ish, I bought 100 shares in small chunks. And when the stock popped up to $70, I thought how smart I was, and I sold every last share for a decent profit. I know you're thinking, well, how is that a failure? That $4,000 to $5,000 investment might well be worth over $20,000 now. So yeah, it can be hard to sleep at night. My second tale is a much happier one. I own shares, so he's talking about the opportunity lost there of additional profits. People think that way sometimes. I never really understood that mentality, but c'est la vie. He goes on to write, my second tale is a much happier one. I own shares on WIN, WIN, and love the dividend and super well-defined uptrend the stock has been in for quite some time. I wanted leverage, though, so I took the proceeds from my dividend on WIN and financed some out-of-the-money call options. Well, on Tuesday, when WIN announced the IRS had okayed them spinning some of their assets into a REIT, WIN popped, and I realized a 1,200% gain that day. Now, I was able to sell those calls and lock in some fantastic profit, all while not selling a single share. So you win some and you lose some, I guess. Thanks for everything you guys do. Love the underground radio. Mark, kudos again for covering Barclays and the HFT shakedown that has been going on. It is the biggest thing no one seems to be talking about. Please keep it coming. He's talking there, listeners, about our Trading Tech Talk show, where we get into a lot of that HFT technology, dark pool stuff that's been very popular of late. I don't know, Kaiser Dog. Seems like you have two winners here that you're profiling. I don't know if I would call these failures. These are both decent winners. I wouldn't be too upset about either of these. But thanks for listening. Thanks for writing in. People like to comment whenever I'm away from the show. And it sounds like Mr. Sebastian got mixed results in his hosting stuff. You did all right, though, Uncle Mike. So you can rest assured in that.
That is good.
A couple other ones, really quick. I know, Alex, you have a lot of people asking questions over there at OX. A lot of people seem to be focusing on what's been going on here and overseas from a regulatory perspective. Their big question these days, of course, they're seeing maker-taker starting to go away in the UK, and they're asking, are we next? This is the million-dollar question right now. If you've been following what we've been talking about on shows like Trading Tech Talk, listeners, you know maker-taker is coming under fire. It is the most recent iteration of payment for order flow. Places like NYSE and ICE and their chairman, Jeffrey Sprecher, have been outspoken opponents of it. Books like Flash Boys have painted a very bad picture of things like payment, causing a disincentive to various market centers. Places like IEX have sprung up in the wake of this, saying we don't take payment, et cetera, et cetera. So it's a very interesting thing. I've given my perspective on this many times on our Trading Tech Talk show. So, Alex, I'll turn the floor over to you. What's your take on this scintillating question from the OX community?
You know, we actually talked about this at lunch today. I think maker-taker is doomed under the current regulatory regime, and I think eventually payment may be short-lived as well. Now, I don't think that means 6 months or a year, but there's an election between when I think payment and we'll potentially have a new president and a new regime at the SEC. I think under the current regime, they're both doomed. And the FSA, the regulator in the United Kingdom, has come out in the last couple of days with a number of decisions that change the landscape. And let me also couch this by saying I don't like regulators getting into this issue, this kind of business issue. I think the marketplace should resolve these things, but that doesn't mean that regulators won't get into this. But it looks like the days are numbered on the current economic model, and that raises the question, and I'd love to hear Andrew and Mike on this, especially on a day when maybe we have some more time or maybe when we do one of our live events. But does the industry change? Does the independent market maker come back if maker taker and payment go away? And I think they both have a clock on them. Might be months, might be years, but I think they both have a clock at this time.
I would, to be honest, I think if the maker taker of all that stupid stuff goes away, yeah, I would probably want to start making markets again, to be honest. Because I think it kind of ruined the business in the first place, because it just sort of, it centered all the activity just around, just huge formations of capital and not kind of the small, there was kind of that small independent capital. So we'll see what happens. We'll see how people adjust to this one. But I think I still never figured out, I know enough about how the regulation works now. It takes an awful long time for the regulators to actually see what's going on after showing them how the NASDAQ worked like 20 years ago when they used to come down to the SIBO floor. So once they understand that with all of these exchanges, the fact that there just isn't some kind of crazy price time priority and then just the order flow goes there. Clearly, that's not what the reason for any of that was in the first place. So I don't see it lasting, but things that you think, the NASDAQ survived as it did for what, 30 years, 40 years, 50 years, I don't know, able to, basically where they are ignoring electronic networks. Now that the exchanges are basically electronic networks, I think probably some of the same rules should apply. So we'll see if there's actual, if you get something for providing liquidity. So I agree with Alex there. I think it'll go, just when. I think it'll take a while because there'll be a lot of lobbying against it, I think, on many levels.
All right, great questions, everybody. Keep them coming. Now it's time for us to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, and just to rub it in for the Rock Lobster, one last check-in here on Zynga before we dive into the Around the Block. And it looks like they are rallying a bit after that initial beating, the initial drubbing they took, where they were off about 40 cents, about exactly the value of that at-the-money straddle. Looks like they're up about 20 cents now from where they were, not up yet. So they're only down about 20 cents. So they've cut that in half, down about 20 cents. So interesting stuff afoot there in Zynga. All right, aside from Zynga, Mr. Rock Lobster, what else are you watching for this rest of this week?
I'd like to see the U.S., I guess, do something on some of these events. You got Syria, Gaza, the Russians, blah, just all way too late to the table, stuff they're going to have to do eventually. They're going to have to push these terrorist guys back that came into Syria to mess up Iraq. It's just all stuff that has to be done eventually. I hope they do it sooner rather than later, because that generally that's better for everything. It adds global stability, and that would make the market rally. But until really you see some sort of leadership coming out, getting these issues actually fixed, I think stocks right now are sort of, like I said, this will be probably a pretty decent buying opportunity. But I think we'll continue to sort of ratchet lower until there's some closure to all this stuff. We get some closure, like I said, as soon as the U.S. goes in, generally we rally and volatility gets totally torched. I've seen it time and time again. And, if we see some jets coming off an aircraft carrier, I would be surprised if we're not up 1.5% or 2% over a 2 to 3 day period.
Mr. Rock Lobster advocating for some bullets and bombs to be unleashed over there on the far side of the world.
It's just getting a little too messy.
There we go. A few bullets and bombs should sort all that out, sir. There you go. All right. What else are you watching? Uncle Mike Tusaw for the rest of this week into the weekend.
Main thing that I'm watching is 190 on SPY or 1900 on the SPX. A couple of reasons. Number one, I think just even though I'm not much of a technician, I think it's a nice round number, and it looks like there could be some levels of support there. Second reason is that's where my long strike price is for my protective put on the SPY stock or the SPY ETF position. along with a long call option that I'm using for smaller accounts. I think if we go down there, I could see us bouncing off of it, but you never know. So I think it's something that we need to be prepared for, whatever happens. And then below that, we have, I believe, the 5% pullback number from the all-time highs of the SPX, looking at that, and just staring at the numbers right now, because we've had some down days over the course of the last couple weeks, but just looking for some type of pivot point or some reason, so to speak, for us to turn around, along with everything that Andrew had mentioned.
And Mr. Alex, what are you watching for the rest of this week, sir?
I agree with both Andrew and Mike. I think 240 on the 10-year will be pivotal. I think 1900 on the SPX will be pivotal. I think the real wild card in all this is going to be Putin, and I think he's playing a game he can't win here, but he may be stupid enough to start throwing troops around, and the market will react badly to that. Exxon and Chevron were moving their people out of Kurdistan today. I think that problem can be worked out, but I worry about Putin. I think the game they've been playing here has gone too far, and I think something really, the problem with Gaza, the problem with ISIS is bad things happen when you're shooting at people, and rockets go the wrong way and mortar shells go the wrong way. And I think if Putin does something that's really stupid, he's really popular in his domestic market, but he's really doing stupid stuff here. But I don't know that he gets that. So if the geopolitical stuff goes bad, and the volatility in the sovereigns today seem to indicate a rush to that, the market's going to get hurt. If that stuff resolves it, to Andrew's point, if we see some American leadership here, this market could melt up. And if it melts up, we'll take out the highs in the SPX, and we'll see a 2000 SPX. But volatility in the sovereigns was stunning today. It was just amazing today. I mean, when the 10-year trades more vol than the S&P, something's going on, and that's what I'm looking at.
All right, thank you for that, Mr. Viceroy. And on behalf of the Viceroy and Alex and Uncle Mike, I want to say thank you for listening. But before we go, really quickly, because that is all the time we have, and we're running a little bit late, we'll dive in really quickly, check in with everybody, see what they have cooking that may interest you. Uncle Mike, you already gave your plug of how to contact you. Is he still you still bringing in the small wealth accumulation clients?
Still bringing them in, probably holding off over the course of the next couple of weeks, but if you really want to give us a call, feel free to do so.
All right, then on behalf of the Pit Boys, make sure you surf on over to optionpit.com. Check out their boot camp stuff as well as all their fun pit chat. And if you can't get enough of listening to them talk on this show and other ones, you can surf on over there, listen to them all day long on their pit chat, optionpit.com. And last but not least, Mr. Viceroy, what's cooking in the land of OX Live Education?
Showcase One event this Saturday. Jimmy Rouzan and the crew at the Westin San Francisco Airport. Live event, simulcast on the site. So if you can't make it to the Westin, can't see Jimmy in person, which, by the way, is an enormous treat and a great show. But if you can't see it in person, just come to the site, optionsexpress.com. You don't need to log in to see all the educational events, full webinar series. There'll be another live event, next live event after San Francisco. It's in Seattle and then San Diego, and I'll showcase those events on future shows. But this weekend, the crew is in San Francisco at the Westin Airport.
I heard he does a mean song and dance routine too, listeners. So check it out, the live events, if you haven't done so already. If you miss them, you're just hurting yourself at the end of the day. And on behalf of Alex and Uncle Mike and the Rock Lobster, and of course myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing to the show, sending in such great questions. Keep them coming. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.